My name is Monty Munford. I'm broadcasting from the South Downs, 40 miles south of London. Ex-columnist at Forbes and the Telegraph, still write for The Economist. Just written a piece this week for the FT. I've interviewed Kim Kardashian, Steve Wozniak, 200 global events. Obviously can't do that anymore. So now I'm in the forest talking to a friend of mine. I've got to get his name right. I'm not sure if I get it right, but I know that Arseny, because he was a footballer. Arseny Klekovkin, nearly. Who's a venture partner, I believe.
G1.
Where are you? At G1. So we're going to talk about blockchain. We're going to talk about the new trendy word in blockchain, which is DeFi, of which Arseny has great experience and great passion. So Arseny, nice to see you.
Yes,
you're in Hampstead, I believe. North London, home of poets and
yes, very enjoyable place.
Please tell us about yourself, about G1, and why we should listen to you.
G1 is an active venture investor with a core focus on blockchain and fintech. Our portfolio includes companies operating in neobanking, in custody, in RegTech. Generally, we aim at this cross-section of traditional world, traditional business, and digital world. We typically aim to go deeper rather than wider, so we get involved with the business and kind of follow on with the investment, aiming at around seed stage and typically as a lead investor. So G1 is 3 partners. All of us have a combination of entrepreneurial and financial experience. And this is what led us around 3 years ago to look deeper and apply the capital towards the blockchain, and within that fintech as a primary kind of recipient of it. The trigger point for investing in projects, and we typically aim at blockchain projects rather than tokens or protocols, was this the end of a hype of ICO boom, and at that point Bitcoin was around 3,000-4,000. So that was for us a trigger to look at the real kind of value additive, mature, sustainable business models that could thrive based on the blockchain technology, and at the same time solving real kind of real world needs or real financial needs.
I think most of our audience will probably know what blockchain is. I mean, I've been trying to explain it at conferences for the last 3 years. I mean, I've got a very, very long-winded, convoluted idea of what it is. It's to do with the UK horse racing industry, but someone who I respect greatly said that maybe I should have a different approach. I think most people know that blockchain. The first blockchain was Bitcoin. There's probably another conversation to be had about the fluctuations of Bitcoin's price and Ethereum and everything like that. But I think the subject of our talk is the future of digital assets. So out of blockchain, we seem to be, I personally think the blockchain for good, for social projects has been successful already. Logistics, shipping, IBM, TradeLens, and all that stuff. But the word that I've been hearing, and the people who seem to know what they're talking about, is decentralized finance, or DeFi for short. Could you kind of run us from, bearing in mind we're talking about digital assets and DeFi appears to be the future, could you try and kind of slowly explain it to our audience what DeFi means and how, whether it's a protocol, a layer, whether it works with Ethereum, just try and simplify it. Well, for me,
well, that's essentially it stands for decentralized finance, and that is what it is. It's a kind of collection of various projects, completely independent, who are contributing to the ecosystem financial services, but they're delivered on a blockchain infrastructure without any use of intermediaries, without any use of traditional system, and like banks, lawyers, nothing like that. But it is delivered largely through smart contracts, which is enforceable, automated algorithms built over blockchain, which enables sort of permissionless and kind of trustless access to all of that. Yeah. And It is the reason why it became, in my opinion, so popular this year is a kind of is because of several factors. First of all, the blockchain infrastructure is mature enough and diverse enough in order to start constructing kind of already more specific, more niche application. Because it started with a Bitcoin as an attempt at peer-to-peer settlements. And although Bitcoin is hugely successful as a project without any marketing, it became kind of one of the something that everybody knows, and it has kind of gained a digital gold status. It is not a settlement mechanism. So the next stage in evolution was Ethereum and this concept of programmable money and programmable securities, where you can essentially conduct crowdfunding without kind of on a protocol, again, without any intermediaries, and it had huge success and it opened up a lot of possibilities, but still it kind of had its risks and ultimately kind of it earned this ICO boom earned a bit of a bad reputation. So after that there was a period of a couple of, well, I'd say about a year when the whole system was where do we go next, what's happening. And although a lot of, like you said, a lot of logistics companies, a lot of banks, they have kind of hundreds of programmers who working and kind of really creating infrastructure in order to use within their specific sectors. Overall, in this independent ecosystem was kind of looking for guidance. Where do we go next? And steady but slowly, what appeared is that the system has matured. There was enough interest from investors. There was enough, I'd say, kind of adoption and awareness about what blockchain has to do. So that those ingredients were enough to start testing various financial services. And it all started with very simple things like if blockchain and Ethereum is not the best way for us to transact, we need something that would be better suited. And in that respect, stablecoin actually became one of the first, I'd say, implementations of DeFi. So essentially, you have a token which has a kind of fixed value, and you can kind of, when we can transact with each other using this the stable coin, so we're not afraid.
So you would define stable coin as being,
yes, it's one essentially one of the ways to look at DeFi is a kind of Lego universe. You have different building blocks which by itself they are not so useful and maybe not kind of not so meaningful. But when you start to construct one on top of each other, suddenly you can replicate very complex structure in very sophisticated services. So for most of the services, one of the fundamental building blocks, you need some stable unit with which you can transact. So that was step number one. The next step, which I personally find is my favorite, is lending and borrowing. So essentially, that all started with a kind of repo type of collateralized, borrowing collateralized with liquid assets. Essentially, if you hold in a lot of Bitcoin, and you need your cash, but you don't want to sell, you want to retain the upside. Projects appeared like Compound, like MakerDAO, where you can essentially deposit your assets and then get and borrow against that. And on the other hand, there was the kind of the community of professional participants and investors also grow. And those guys need to borrow those assets in order to provide liquidity to the system, or in order to execute more complicated trading and investment strategies. So and then this flow, this is really beautiful because they started to get connected through the lending protocols in a way where there's no intermediaries, there is no fixed cost, and that creates a basis for lenders to earn more and for borrowers to do it on a transparent basis, where essentially you can see how much who gets what slice of a pie. And this is all transparent and auditable.
Yep.
And this is real business. This is not about some future potential or issue of a governance token which may rise and which may not rise. This is, you can see where the economics of the process come in. And this is directly replicating what's happening in current kind of traditional financial system. But in traditional financial system, if we look at depositors, when I go to the bank and I deposit my euros, in nowadays I have to pay to the bank in order, which is kind of looked ridiculous, but this is what, or at the very best, banks pays me nothing, but banks still uses this money in order to lend it to somebody, and they're making money, and somebody who borrows, they still pay. Maybe they pay less, but they still pay. But that money goes largely, particularly with the current low rates, interest rate, they go largely to repay the cost of a bank. Now here we don't have any costs, any fixed costs, so that all becomes a lot more. And this is one of the reasons why in the current yield-hungry world, a lot of large and small investors are drawn towards it. And then we.
I think what you said, the yield-hungry world, is a very, very good phrase. But sorry to stop you in your very full stride there, but you know, there's two of us here, darling. You know what I mean? Not just one of us. No. I've just forgotten what I was about to say. I think that at the moment everyone's a bit rattled, much more rattled than they were during the 2008 financial crisis. Everyone's a bit worried. I think everybody knows that there's going to be economic hardship to come. But I think under lockdown, and we were talking earlier, you were spending more time with your kid, feeding the ducks. I was playing the bongos a bit more. You know, we're all kind of culturally changing what we do. And I would like to suggest to you that we're also changing the way we think about money. You know, what is money? The centralized Bank of England, or, you know, the US Fed, or whatever. I think the notion of value, or the notion of currency, to me is very different. You know, I could be doing this conversation with you for free, but I could also invite you onto my podcast as a sponsored guest, BlockSpeak.io, anyone. And then there would be a currency that flows between us that, you know, this conversation may lead to something else. Or it might be that I go into the forest and find some woods and I give it to someone, you know, like we go back to a bartering system. So that the headline of the future of digital assets, do you see that as an early mover in blockchain and as a VC? What trends do we have in digital assets? I mean, DeFi clearly is one of those trends. What else? What do you think the future is going to be of money and digital assets? What will it be?
Well, essentially, we have several things in play here, and this concept of programmable money is only kind of in its early development. So what we're seeing right now is a kind of real threat that the money that we hold in will be in some shape or form devalued, and we're not in control how this is going to be done. This is decisions of rather credible parties, but still it's kind of some kind of decisions which are outside of our control, and it's not that easy to predict. It's probably easy to predict what happens in the next kind of couple of 2 years, but not in 10 years. When we turn towards kind of digital money issued independently, this is where we can have more predictability. At least we can know from the onstart what to expect from it. The trade-off is that the digital money are not that kind of widely used and are not widely accepted in the real world. And this is a question of this bottleneck, this connection between real and digital world. And that's where, by the way, I see a lot of opportunities for businesses to develop, because as soon as we broaden this bottleneck, a lot of wonderful stuff can happen. And those who sitting on this bottleneck can benefit from it. But then on the other hand, I have to say that these two worlds are kind of moving towards each other at a high speed, because virtually any kind of any central bank is thinking, at least carefully looking, investigating, and some of them are even piloting now the context of central bank digital currencies. And the major question that they struggle with is how to actually do it, right? Because essentially, again, the whole concept of blockchain, of DeFi, everything is the next step in digitalization and disintermediation. So essentially, you can have in theory, you can have a direct relationship with a central bank. You can open a wallet with a central bank, and a lot of stuff can happen there. But then, if that is to happen, then that will put at risk all the existing traditional systems. So, in a way,
absolutely. We got this. No, we have a couple of questions here. A guy called Rolf V.D. Steen. Not sure about your middle name, mate. It's a couple of questions here. It's suggesting that programmable money equals a digital wallet. Would you agree?
No, digital wallet is just your access, access point towards programmable money. It's the way you can access it.
Where you can get it. Someone stole 163 Ether from me 2 years ago from my so-called safe wallet, and I don't want to talk about it because Ether's got up in price, and the $25,000 that I lost is now probably closer to 100. So we'll move on from that. Rolf is also saying that blockchain will enable the acceptability of digital wallets. I mean, that's kind of obvious, right?
Well, in my view, no.
Sorry, Rolf.
This is the really hot topic that is not that obvious, because this access points, essentially how people can access digital assets. They can do it through the wallets, that's kind of crypto exchanges, or they can do it through traditional infrastructure, kind of intermediaries, brokers, banks. And although this is blockchain and DeFi is all about disintermediation, right now, these banks and brokers, they have a role to play. They're trusted parties. They have regulatory backing. They have customer service. They know what their client needs, and they're now very well placed because all the technology is available. Just integrating this access point can be really, really valuable for everyone. It gets people convenient access. It gets these intermediaries new business, which they're kind of struggling with. And that kind of widens this bottleneck of access to the digital world.
Yeah, I agree with that. But the kind of the notion of digital assets. I mean, one of the things I thought about blockchain, as much as I think about humanity in general, is that we are pretty nice to each other generally. If you were in a restaurant and you turned around to me and asked me to pass you the salt, I'd pass you the salt. We're natural communists as people, but it's the centralized people, allegedly above us, that kind of change us as a species, as well as a bank being central to somebody's money. And I've always believed in the kind of philosophy of digital currency or Bitcoin, because it does feel like it's decentralized. Why should I pay someone £1.50 to take £100 out of a cash machine? I mean, just because some centralized idiot is taking my money. And why is it so difficult for us to kind of deal in assets and currency? Because it's controlled by people that probably aren't that nice. You know what I mean? So if I said to you that I thought the future of digital assets would be positive or decentralized or peer-to-peer, would you agree with that?
I think it's clear that this it's very bright, I would say, and I think a lot of it's inevitable. We don't know how it will happen, but it's inevitable that virtually all of our settlements, all of our financial activity and more will move to the digital world. And if we were to make a 10-year bet, I think that like in 5, 10 years, we will all be transacting rather through digital wallets rather than through traditional banking system. That's for sure.
Absolutely.
But right now, as I say, there is a golden opportunity for the traditional system to evolve and a profitable opportunity.
But perhaps that kind of traditional system is already being kind of disrupted by fintechs,
completely, right? Yes. There are all sort of like open banking, neobanks, but all of them are about making things more efficiently, like really removing this fixed cost out of the system and making it more efficient and removing the kind of human element from the system.
Yeah, no, absolutely. Well, yeah, I mean, I want to keep the human element in transactions, especially money. You know, what I mean? Mario Alves, thank you for your question. We're coming to the end. Maybe you'll be the last but one question. What's your view on NFTs, Arseny? You know, collectibles, art, certificates such as that. It's not money, right? But I presume, well, I suppose it's a digital asset.
I think also very bright future, because if we look, for example, at the recent kind of upgrade of Apple system, now they partnered with BMW, and now you can kind of open your car with a phone, and then you can essentially transfer your keys. Your keys become a token, right? And then you can transfer to the people, and that can happen with the car itself. So your rights to the car can become a token, which you can sell a lot more easily rather than through what other, and that goes on with everything.
Yeah. Another question from Pooja, which I thought that's something that Buddhists did. Was it like some type of offering? But anyway, Pooja Vora, thank you for your question. She's very polite, and she says, "Pardon me if I am wrong," as if she's like an English lady, but I'm sure she's a lady. I'm sure she's a great human. But she's saying here, how do we systemize or standardize peer-to-peer and ensure safety between those transactions? Transparent and governed assets are embraced in trading now. How do we make them safer?
I think it has several elements. One element is technology. For example, secure multi-party computation allows to get rid of private keys and make access very secure. Then the second element is some kind of backup. Right? It can be some kind of regulatory coverage, or it can be some insurance. So once that is in place, and that depends on the technology as well. So that gives you some safety, and ultimately it's about kind of access and awareness of people. People will start to try it with small amounts and kind of with small transactions. Then ultimately, as you get comfortable, it can grow, and the sophistication of the products will grow as well.
Yeah, and the ease of getting. I mean, I've just started trading. I've just for the first time in my life, I've transferred some of my Bitcoin onto a trading platform, expecting all types of difficulties.
Yeah,
but no,
it's become more and more easy. You know what I mean? You're right.
It was like 2 years ago. It was almost as if you were breaking the law. Now it's like deposit, 3,000 Bitcoin. Yeah, QR code, bang, bang. Oh, look, brilliant. But I think that type of thing is going to open up the bottleneck, right? I think we both agree that once you kind of, once you take the finger out of the dam, we'll be flooded. Slim Teller, apologies for calling you Slim Teller. It was just like my confirmation bias. I thought you were called Slim, but my eyes aren't too good with a screen. I know, of course, you're Sim, not Slim. We're probably going to wrap up now, unless you're really quick and send us a question. Thank you, Sim, for your slightly weird emoji. Sim, sorry, God. Any more questions, please? Because Arseny is a font of all blockchain and DeFi and the future of digital asset knowledge. Going once, going twice. Okay, Arseny, Klekovkin, correct? Do you know what my son had a kind of chart? He used to call me Klekovkin as a father when I was younger. So it's quite a similar thing. Amazing insight. I hope that we stay in touch personally afterwards. I've really enjoyed. Can you just give me your Twitter handle for one of our guests?
Well, are we more active as Giovanni, more active on LinkedIn rather than on Twitter? So.
Okay, yeah. It's easy to find you, isn't it? Okay, listen, I wish you a happy London afternoon. I am going to get on my motorbike and I'm going to drive to Brighton, leave my bike at the station. I'm going to get drunk with a few mates in the afternoon, because why the fuck not? Do you know what I mean? Yeah. Thank you, Upstart, for introducing us. Thanks for the audience for sending in some great questions. I've enjoyed myself. Arseny has certainly given me some food for thought. I wish you all a happy Friday.
Bye-bye.
Bye-bye.
Thank you.
See you, Arseny.